Welcome to Japan Web3 Weekly, presented by Wakyodo. I'm Keisuke, CEO of the company, and this is episode number 37. Every Sunday, we bring you the latest developments in Japan's Web3 market, and today, we're diving into the Financial Services Agency's newly published discussion paper on crypto asset regulation. If you're a lawyer, policymaker, or deeply involved in digital asset policy, you want to hear every word. And if you enjoyed this episode, please give us a like and subscribe for more insights. On April 10th, the FSA released the discussion paper titled Examination of the System for Crypto Assets and launched a public consultation period running through May 10th. You'll find a link to the full paper in the episode description. Please note, it's only available in Japanese. This paper represents the culmination of a year-long review aimed at ensuring Japan's regulatory framework keeps pace with the rapid evolution of blockchain technology and the expanding crypto market. FSA begins by stressing that healthy Web3 development is critical to solving Japan's social challenges and boosting productivity. By leveraging blockchain-based crypto trading, Japan can advance its digital economy, provided the right environment is in place. Yet, with that opportunity comes significant responsibility. Crypto assets remain highly volatile, and without robust safeguards, investors can suffer heavy losses. At the same time, if regulation becomes overly burdensome, users and innovators may flock to offshore platforms, eroding Japan's competitiveness. Against this backdrop, the FSA identifies four urgent challenges. First, information disclosure must be strengthened. White papers and project materials often lack clarity and discrepancies between documentation and actual code account, leaving investors in the dark. Second, user protection and action against unregistered operators require enhancement. The FSA's helpline receives over 300 crypto-related complaints per month. Third, improper investment operations and advisory practices need to be addressed. Unauthorized advisory services are proliferating outside the exchange regime, posing risks to unsophisticated investors. Fourth, price formation and market fairness must be assured. With crypto now a mainstream investment, Japan must guard against insider trading, market manipulation, and ensure fair, transparent pricing. Beyond these four, the paper also flags the misuse of crypto for money laundering and terror financing, particularly following exchange hacks, underscoring the need for continued vigilance. To tackle these issues, the FSA proposes leveraging existing laws, especially the Financial Instruments and Exchange Act, rather than creating an entirely new regime. A key innovation is classifying crypto assets into two categories. Type 1 tokens are issued to raise funds for projects. Think utility or governance tokens, where issuer disclosure duties are paramount. Type 2 assets like Bitcoin and Ether underpin major networks and require ongoing exchange-level disclosures about protocol upgrades or governance boards. For Type 1 tokens, the FSA wants issuers themselves to bear the primary obligation for full, accurate disclosures. Token rules, governance structures, code audits, user processes, project roadmaps, and risk factors. Exchanges would vet these disclosures, but the core duty lies with the token issuers. This shift aims to eliminate the information asymmetry that too often leaves investors exposed. For Type 2 assets, the proposal is to require exchanges to explain asset mechanics and notify users of material events in a timely manner. So when a hard fork or major upgrade looms, users are fully informed before trading decisions. On the business conduct front, the FSA will review which exchange rules, cold storage, ML KYC, cybersecurity, should be enshrined under FIA versus delegated to the Japan Virtual and Crypto Assets Exchange Association, the self-regulatory body. The aim is to maintain flexibility, allowing self-regulation to adapt swiftly as DeFi, staking, and lending evolve. The paper also calls for tougher enforcement against unregistered operators, seminars, advisory services, and offshore platforms that target Japanese investors without FSA oversight. Market opening rules remain under review. Unlike equity exchanges, spot crypto markets in Japan are exempt from formal exchange licensing. The FSA sees little need to change that now, given crypto's inherently multi-venue trading model, but stresses that all trading venues must uphold rigorous order handling, system resilience, and surveillance standards. This stance will be revisited if concerns about fair price formation or market integrity emerge. Perhaps most forward-looking is the call to strengthen insider trading and unfair practice rules. Today, crypto falls under general prohibition on market manipulation, but lacks an explicit insider trading ban. The paper suggests Japan consider either a black letter approach mirroring securities law or a principles-based rule focused on material non-public information. Any new rule must reflect crypto's global, decentralized nature and ensure clarity and enforceability. Finally, the FSA recognizes that decentralized exchanges and peer-to-peer trading, bypassing traditional intermediaries, could expand significantly. While current proposals focus on regulated exchanges as gatekeepers, the FSA pledges to monitor the growth of non-custodial trading and DeFi, ready to adjust regulations to safeguard users and markets. The public consultation period is open until May 10th. Exchanges, token issuers, legal experts, investors, and other stakeholders are encouraged to submit feedback. The FSA will then analyze responses, benchmark international developments, and refine its proposals before formal rulemaking. That concludes today's deep dive into the FSA's discussion paper. Wakioto supports global Web3 projects entering the Japanese market as an interim country manager, assisting startups and VCs with fundraising and market entry. If you're looking to expand your Web3 business or raise capital in Japan, we're here to help. Thank you for joining us on episode 37 of Japan Web3 Weekly. We'll see you next Sunday.